Morning, everyone. Welcome to this morning's edition of the MPC Markets Morning Call, 30th of October, 2025. I'm Mark Gardner. Huge amount of earnings. Well, very big in terms of market cap, certainly. Very mixed in terms of these results. So Google was the clear winner. They smashed earnings on really across multiple different facets. We'll get into it in a little bit more detail in a little bit. While Microsoft and Meta, well, Microsoft beat, but still disappointed the market down slightly. Meta had a fairly large tax write-off and very much disappointed as well. So we'll just go through here. Obviously, we got the equity markets overall. Broadly mixed. One of the worst sort of days in quite some periods in quite some time yesterday for the Aussie market. We had that Aussie CPI number yesterday, and at 3.5%, and the trim mean for the quarter above 1%, expected at 0.8, which is the RBA's preferred inflation number. Basically takes rate cuts off the table here in Australia for at least this year. It could be one and done, which would be very surprising because they don't normally do 125 basis point and then finish a cycle. Usually there is at least 2 to 3, if not more. But look, I wouldn't be surprised with a one and done, though, being the first sort of time we've done that, just on the basis that I think the first one was just under such public pressure. And I've been very critical of the media in Australia politicising and the government politicising the RBA. They're supposed to be the adult in the room. That's the whole purpose of having them as an independent body, because you cannot trust politicians and people with big mortgages to make decisions on interest rates, because they're always going to, make a decision in favour of hyper growth, which then leads to inflation, which, your property might be up, there's no point in your property growing by 15% a year if inflation's at 5%. That's just eroding real wealth. So that's why central banks need to keep inflation under control. So look, Russell was down 1% overnight. Nasdaq was up on the back of Nvidia. President Trump said he has plans to discuss the company's Blackwell chips with Chinese leader Xi Jinping, and that's sort of raising hopes of relaxed export restrictions. And obviously, as I've said in the last 2 morning calls in a row, Jens is very good. And when I say showman, I don't mean that from a disrespectful standpoint, but he's very good at pumping the positives. And those, whenever he's doing a conference, it's possibly one of the easiest trades in the world is just to go long for that period. This really helped as well. But as you can see, Nvidia really doing the heavy lifting. So is Broadcom. So I've got the after earnings results because these earnings come out. So this is the day session results or net changes. So Nvidia was up 3, Broadcom was up 3.5. We still had uplifts in AMD and Micron and et cetera of around about 2%. Palantir was up another 5%. Caterpillar was a great result. Now, seemingly, it's a bit of a bellwether of the economy, or is treated as. But they had great results across the board. But they're selling a lot of those automated and AI. So they're almost an AI company, which people laugh when I say John Deere. Similar, it could be an AI company or a data science company, but it's the extra add-ons with these trucks and the and efficiencies that they can now bring, which makes them more. They're not changing the price; they're making them more affordable because someone can sit in an office and drive 2 of them, for instance, or they can set them as automated, so they're not. They're not having, they're not paying a driver exorbitant amounts to be fly in, fly out in a mine, or et cetera, et cetera, et cetera. They also do make significant amounts of the backup generators, the diesel backup generators for data centers. So, that's also helping demand for those guys, but up 11.5% for them. A couple of our favoured stocks in the robotics. And we've got our robotics webinar coming up next Tuesday. But a few of the stocks, and just to give you a little bit of a sneak preview, The likes of Teradyne were up, I think was up significantly last night. We saw, Symbotic up about 10% as well. And yeah, I think I'm just grabbing these numbers up here at the moment. Symbotic was actually up 14%. Teradyne was up 20% overnight on good earnings as well. That I think that thematic's going to be fantastic leading in overall for the next few years. We also had a couple of sort of fringe earnings, but I mean, really the big show, here we go, is and we've got Apple and Amazon tomorrow, by the way, but we'll just skip through that. So Alphabet, look at this. So essentially, they just beat on everything. The earnings per share was 287. They absolutely smashed the expectations there. Revenue was 103 billion, 16% improvement from last year. As you can see here, that's the big one. Google Cloud jumped 34%, 15 billion in revenue. Net income also climbed to 34.98 billion, which is 34% margin, which is up 4 basis points. So, revenue up and margins up is just, it's a fantastic result for any company, let alone the AI. And I think that's why it was up about 8%. I think it may have drifted back a touch now, but it was initially up 8 to 10% after the bell. And, strong advertising, strong cloud. And look, if anything, and this was a theme across all of the results, there are concerns generally around, around heavy AI and infrastructure investments and what pressure that's going to put on future quarters. But look, I mean, it was largely ignored in the case of Alphabet. As you can see, these numbers here, revenue and operating income for Google Cloud. I mean, this goes back to 2020. Is just, look, you don't get much better than that. Like that's a beautiful chart if you're an investor. And it even seems to have accelerated quite significantly here, in the last few quarters as well. So, a very boring thing to say, but as I say, from an investing standpoint, that chart's a beautiful thing if you're an investor. Microsoft, basically the operating margin didn't really grow. I mean, and the Azure was what was largely. It was, let's face it, it wasn't disappointing. I think the market was just expecting too much. So, you look at all of these numbers, they're all absolutely fantastic. There's a slight improvement in margin. 43% operating margin in cloud, up 28% year on year for Azure. Even that, they're up 17% in their normal businesses as well. So, look, realistically, revenue up 18% year on year, and the gross profit, operating profit margins up 2 basis points. There's nothing wrong with this result. It was down about 2% in the aftermarket. Everyone's fairly upbeat, but again, it's 80% of companies plus beat Wall Street expectations. It's a bit of a joke because there's no one, they can't consistently beat by 80% all the time. So they're clearly going a little bit under because beating expectations is a positive headline. But clearly they were, I think investors were expecting more out of Microsoft, and they did have that last earnings result they had. They knocked it out of the park. Like it was a result from like a proper growth company, not one of the foundation tech stocks in the world. So I think overall that was probably just people coming back to reality, because Microsoft's been, I'm not going to call it a plotter because up 18% year on year is not plodding along, but as far as these large AI and tech companies, it would be the safer bet, and lowest volatility overall. So look, it was only down about 3 or 4 in the aftermarket, but look, I mean, and it beat on EPS as well, and I think it may have even beaten on revenue. So it beat on top and bottom lines. So that's that's where a mild indication that we are a touch frothy, that these things can beat and get whacked. I mean, Google being the exception to the rule, but Google beat on all of its metrics, all of its traditional businesses and AI. So that's fair enough, but but then, as I say, investors, and analysts are still concerned about the amount of infrastructure spend from all these companies. So Meta was a different story. So revenue, revenue was still rising to 70 billion, up 12% year on year. But obviously, as you can see, even Microsoft was 18. Revenue grew 26% year on year. It comfortably beat expectations. Earnings per share, they had a massive one-off 16 billion tax charge tied to the one big beautiful bill. So this it was connected to a change in US corporate tax law, and reduced the company's earnings. So they delivered $5.67. They're expecting $6.72. So that's a significant miss. If this one-off tax wasn't placed in this, they would have beaten by a good sort of 65 odd cents. Their EPS would have been 7.25. So not as bad as not as bad as probably the 10% that it's fallen in the aftermarket. But again, I think Zuckerberg's basically gone, well, we're delivering the bad news of this tax, this tax thing. It's going to cost us 16 billion. So he's also gone and said, he's also just shoved in there, well, if we're delivering bad news, we may as well get it all out. And they raised their capital expenditure forecast as well, which is never taken well by shareholders, generally. So, there's now sentiment around Meta is really fairly negative, I would say, in the immediate aftermath. But look, they've still got top line growth. They've still got a commitment to dominating the AI landscape. But again, that common theme is this infrastructure spend up front doesn't. You can have revenue growth, but it doesn't necessarily multiply into profit growth or EPS growth. So so overall, we are sort of getting to that point where the concerns around this spending too much money for what could be very future earnings could start to disappoint, particularly when you've got these things we're in the midst of the best 6-month bounce in history out of a fall of 20%, and probably like the best 3-year rally since like the mid 90s. So when markets are this frothy, or they're on this kind of run, you've got such little wiggle room to disappoint, and even beating can be disappointing. You know what I mean? So yeah, overall, we've got Apple and we've got Amazon tomorrow. The focus for Amazon is going to be very clearly on the whether they've eaten a bit of or cut Microsoft's lunch, Azure lunch, with the AWS services. I'll try not to be too negative on Apple, a company I'm not a massive fan of. I cannot understand for the life of me why people remain positive on it. Just given their lack of innovation, how much they've just not almost seemingly voluntarily not participated in AI. It's just sort of a bit bewildering to me. But that's what makes a market, I guess. But gold overall was down slightly. That'd be on rate cut expectations being, they were expecting a far more dovish Fed. There were a couple of guys. So, I mean, very clearly, Governor Stephen Moran, he favoured a 50 basis point cut. So he's very clearly lobbying for the Fed chair job. Jeffrey Schmidt from Kansas City, who's a voting member, which I don't know a lot about Mr. Schmidt. He supported no change. So he'll be probably very lucky to keep his seat when Trump can clear this thing out in May. Maybe he was looking at retiring anyways. So they are going to end their balance sheet reduction by December, which is quantitative tightening, which is effectively a bit of an easing. But Fed Chair Powell was really clear that there could be a December cut, but it's definitely nowhere near a certainty. So, and the language was, well, for an economist and a Fed chair, was quite strong. That don't expect more rate cuts, and we kind of had 75 basis points priced in at one stage. That could dramatically change if the government shutdown finishes soon and we get negative employment numbers. But without data, you can't really. It's really hard to make decisions. So, I mean, I don't envy the Fed's job here. I mean, apart from being politicised, and then on top of that, not getting economic data, which is basically the equivalent of blindfolding yourself and throwing a dart at a board. So yeah, but gold, rate cuts are good for precious metals. I'm pretty surprised silver and copper rallied. Truth be told, they rallied about 0.5% each overnight. But yeah, gold probably fair enough. I mean, down 0.4 with a hawkish Fed really is probably not a bad result, to be brutally honest. Uranium still powering ahead on that Google next gen sort of news. I mean, it's one of about, I think we're up to about a dozen deals now that these mega caps have done. Iron ore is still making a nice little comeback as well. Between copper and iron ore, you would expect BHP and Rio. They're looking pretty cheap, and hopefully we can bust through that upside. In iron ore, where it's sort of been capped for the last 6 months, it's been a touch frustrating. Bitcoin was down slightly, as I said, probably just on disappointment about no rate cuts overall. So as I said before, we've got our AI, automation and robotics future, and investing ideas. There's going to be stock picks. There's going to be strategies. We're going to walk through what investing in this next age, or this next phase of AI. As I mentioned earlier in the show, two of those stocks just overnight were up 14 and 20%. So you probably want to have a bit of a listen, and for the ASX investors in particular, we'll go through which of the ETFs we favour, etc., and gone and done some detailed research on the weightings and things to make sure that you're getting on board the right one. That really wraps it up for today, and we'll. I would expect the Aussie market overall would be fairly mixed. Not expecting a huge amount out of it. Probably some follow-on selling from that shock from the CPI number yesterday. So again, I think the price action in Meta and Microsoft overnight do signal, a mild flag of a potential top. And I know I'm using a lot of very ambiguous language there, but I didn't particularly like the price action of those two. We will see whether the froth comes out of Nvidia as well. It did tip over 5 trillion last night, the first company to ever do that in history. But this is again on opening up a market that Trump can change his mind like after breakfast. So who knows about that? So I would still think caution is warranted here, and you should be reviewing portfolios just in case we do have a slip back, given how well this market's run. Have a great day, everyone. We'll speak again tomorrow. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.